whether that's due to a vaccine now for New World Screwworm or just the weather cooling down and lowering the threat of the disease transfer. Good afternoon, everyone. Welcome back to the CommStock channel. I am Relph with CommStock Investments. I'm going to try to get through this pretty quick because technology hates me, so I'm going to have to outrun it, I think. I'm going to look at a couple of things as we finish up the week, some kind of remarkable markets, some movement that maybe we thought we saw that didn't actually see as we lose sight of relativity to recent price action. Oftentimes within the market, especially the ag markets, and we look at intraday fluctuations and think there's something meaningful happening when actually there's not. So going to take a look at a few of those things, some markets that have made some big moves both up and down this week, as well as some data in the cattle that I found interesting and thought maybe you would as well. So I'll share some of that with you. Taking a look first at grain markets as we coming into about a half an hour left to trade here. December corn down $0.0125, down about $0.015 for the week is all. So whatever fluctuation we see today is our fluctuation for the week. Not a lot going on in the corn, despite how the markets have kind of felt this week. November soybeans, not the same story. Currently down a half a penny at 10.2325, but that chart looks very much different after we made a low on Wednesday and a key reversal higher. Saw significant follow through yesterday and just kind of simmering to end the week here this week. Keeping in mind what Justin highlighted in his video yesterday, we do not get commitment to trader reports, so they can do anything with their position without us knowing the realities of it. There will be trade guesses as to what the funds are doing with regards to buying or selling and lengthening or shortening their positions, but we don't know the actual details, and we don't know it to be factual until we see some commitment of trader reports, which we won't see until after the government shutdown is over when we start getting that data again. Soybean oil is off about 27 cents here with the meal up 30 cents per ton. No big moves there. Wheat is at least stable here today after December KC makes a new contract low on Wednesday. Reverses higher, leaves a tail on the market. Doesn't finish higher for the day on Wednesday. However, finishing well off of that 488 low was somewhat significant. Then to see some follow through yesterday made you feel okay. Probably just some position squaring to end the week here. We were trading above $5 this morning. I jokingly said it's nice to see trade above $5. Terrible that you get excited about that. But that's what we had this morning. Can't keep that going into the afternoon. The energy sector has been mostly weighty this week. November WTI crude oil currently at 61.09, up 61 cents. But it has been in a free fall for the first four sessions of this week. As you can see here, just fell off a cliff, traded to new multi-month lows before seeing a little bit of recovery here today. Hopefully we can maintain some upward momentum going into next week. The opposite is true in the metals. December silver up $1.55 right now. That about 40 cents off of the high that was posted earlier today. We did make a new contract high, a new all-time high. And the gold doing the same thing, currently trading above $3,900 in the December gold, up 40 on the day. These markets have been bought up every single time we see any kind of significant dip. No matter if it's for an hour or a day, we seem to attract buyers, and that has been the case over and over again. And the platinum not too far behind, currently trading at $16.19 per ounce in that October contract. Although not a very tradable contract at this point as we have to get moved out of the October. Still, it is making up the continuation chart, and you can see here we are very near the highs. A close here would be a new all-time high close. So these metals have just been on fire. Cattle are positive as we come into the last 15 minutes of the cattle trade. October feeder cattle up a little over $2 at $356.47. That is still the lower end of this consolidative range that we've been in for quite some time, and we're starting to set up a little bit of a wedge formation. As you can see, the tops here, barring that one little spike up, and then the bottoms across here. This chart looks like it's due for a breakout. Of course, nobody knows which way it's going to go, but I did think it was interesting that we're tightening up so much in the ranges in a market that is still very volatile, but feels like it's trading an up and down chart that looks very different than what we're seeing here. Although we're seeing some significant movement intraday, we're just not moving the market anywhere, and that reflected in the moving averages that are starting to consolidate right around that 355 to 358 range in the October contract. Live cattle are about in line with where we've seen northern fed cattle trade. 228 to 230 is going to capture most of the northern trade. Currently, we have the October contract up 20 cents at 230.72. In the south, going to see a little better 233 live. Dress trade has been troubling of late. The trade last week at 365. This week, not expected to exceed 360. We will likely see our third consecutive week of over a $5 drop in the dress beef side of things. The other concerning point right now is choice boxes down 5.25 yesterday. That, of course, caught a lot of attention within the industry. And over the past month, I'll highlight this again because we are right at a month now. On September 3rd, we posted 416.01 in choice cuts. On October 2nd, exactly 1 month later, 363.22. So a $53 drop in 1 month's time. Pretty remarkable. Not a good look here for the box beef market, and that is what the packers are using for leverage when they are outbidding in the country right now. That led me to looking at a few other things and what are our imports and exports looking like on both the beef and cattle front. We know that the border shut down with Mexico. We know now that we have additional tariffs on Brazilian beef. The USDA does put out data on those imports and exports, albeit a couple months delayed by the time we get the data, and likely to be more than that if we stay in a government shutdown too long. But I did have a few things jump off the page at me. When I looked at the total imports and the total exports of beef, you have a 53 million pound import increase. So we're bringing in a lot more beef than we were July of last year. So this is July of this year versus July of last year. You have a 53 million pound increase in imports and a 48 million pound decrease in exports for a total swing of 100 million pounds year over year. You're getting a lot of beef from the import market and you're cutting back what you're sending out in the export market, that bringing a lot more available supply to the U.S. The other thing that jumped out at me was China's imports of U.S. beef have dropped off from 39 million pounds a year ago to 2.5 million pounds this year, that directly relative to the trade war that we're in right now. Cattle imports are down 100,000 head and cattle exports are near steady. So we're not really exporting any more cattle, but we are importing far less. That, of course, due to the Mexican border situation. If there is any validity to the idea of the U.S. border reopening for Mexican cattle in the next 30 to 90 days, as we've heard reports of, whether that's due to a vaccine now for New World Screwworm or just the weather cooling down and lowering the threat of the disease transfer, whatever the case may be, if that border does reopen, we've already got cattle backed up in the north. That should start to ready the supply in the south a lot more. Things could change dynamically as we move forward here. So just wanted to share all that with you. Hope you guys have a great weekend. On behalf of producer Brian Jenkins, I'm Eric Relph. We'll see you next time right here on the CommStock channel.
Futures trading involves risk. The risk of loss in trading futures and or options is substantial, and each investor and or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.